because I'm going to go to the 15-minute time frame to explain that. So when I saw this, actually this high was a liquidity. Actually, I didn't see that. Okay, I'm sorry. All right, I'm sorry, I didn't see that. But this was an internal range liquidity, and price mitigated the liquidity over there. Now, guys, when we come over here, I want y'all to remember about the turtle soup model by ICT, right? Remember how the turtle soup setup forms. Remember how the turtle soup setup entry model is, and I think you should combine that with CRT. But since I'm not going to be explaining CRT over here or a turtle soup, I'm just going to go like scratch the surface of all the models over there. Okay, now this price was pushing upside when we saw this high being mitigated, and then now this is where the turtle body soup model forms. So how does that form? Well, if you see over here, this was okay, guys, forgive me, but I think I should go to the 5-minute time frame for y'all to see clearly, but I don't think the 15-minute time frame is way visible that I'm expecting. Okay, yeah, this is exactly what I want to see. Now this was the high, right? What happened here? Price, you will think that price did break structure, right? But after seeing the black candle displacing below this low, you will know that this was a turtle soup forming, right? A liquidity sweep, or a stop trade, if you want to call that, or a stop hunt, whatever you want to call. So I would call this a turtle soup. Okay, I don't have the name for that, but just know that this is a turtle soup setup. Now, a turtle soup setup works very well whenever a high that formed or that was responsible for the impulsive move that raided the stops over here get displaced by a candle. So this was the high. It's kind of like overlapping with this high though, but yeah, I want you to see that clearly. But this was the high, and if you see here, okay, let me mark this what let me make X. Okay, so think of this as turtle soup. Okay, I have more time, so I can just write that for you guys. So this is the turtle soup. Okay, let me place that to the right there. Okay, left. Yeah, so this line over here is the turtle soup. Okay, great. Now this eye over here was the high. Okay, I'm gonna put it just above here, but just know that this is the high. Okay, so this was the high, and the turtle soup setup becomes more clear or more efficient whenever you see a displacement candle literally inversing the fair value gap that formed that push. Alright, so if you see here, there was a fair value gap over here, right? There was a fair value gap that was supposed to hold, but you can tell that price inversed this fair value gap over here, right? So I'm going to call this an inversion fair value gap. So whenever a fair value gap has been inversed or run over through, it becomes an inversion fair value gap. Now after that, you see that price runs through this, give us a change of character, indicating that this is a reversal setup. Just trying to tell you that you should be selling that trade, right? Okay, now the change of character happens, and then we see an expansion. Price goes up again to the inversion fair value gap. So price comes to the inversion fair value gap. It respects the inversion fair value gap. It also respects this candle over here that's going to be acting as our order block. Okay, so this black candle over here is going to be our order block. Price taps into the order block, give us a resistance, or whatever you want to call. You can call this an SMT. It depends on how you mastered or how your mentor taught you how to trade this or how to call this, but it's the same thing. The resistance, support, not support, but SMT. Okay, price does that, and after that we see a good short position. That price comes all the way down here, and to the left we had an order block. Price respects the order block, pushes up again, respects this fair value gap over here. Yep, and then this breaker block that was respected too, and then price started dumping again. Now these, okay, it forms another SMT or a resistance over here, and it started pushing down. Now this is where I place my, okay, so when I okay, sorry for that. This was on Friday, guys, and this was on Sunday. Okay, so this trade, I actually took this trade when on Okay, I analyzed the trade, and then I placed my sell limit orders so that when Monday was opening up, I already had my sell limits above this high over here that I'm going to be explaining right now. So whenever this trade was playing out, I already placed my limits over there. So whenever I woke up like 8 a.m., right, the TP was already smashed. So yeah, okay. So that's the reason why you're seeing this gap over here. This was the weekly opening gap because this was Friday and this was Sunday. Okay, yeah, this was on a Sunday, this was on a Friday. It's a weekly opening gap. Now whenever this resistance was formed, or SMT, remember our bias here was that we were trading a reversal, right, a bearish reversal over here. Now when price respects this fair value gap, we see a dump, we see another low being taken out over here, and then price reverses back, and now this is going to be acting as our breaker block. So we see a little bit of accumulation over here, right, consolidation, and then we knew for a fact that this was going to be our breaker block, and the price was going to be taking out this accumulation over here, right, this pool of liquidity that price is forming over here. So there is liquidity that is lying above there, and there is liquidity that is lying below here, right? So I hope you all know exactly what I mean when I say accumulation, manipulation, distribution, or the AMD, the power of the AMD. So how it works? Well, accumulation is basically consolidation. Price can particularly move to a certain direction. It's just ranging at that certain point or zone. Manipulation comes in when price is breaking out of the accumulation phase, right? So manipulation, the reason why it's called manipulation is because it's manipulation. Well, it manipulates you into thinking that price has broken out of the accumulation, and then most of the traders are going to be like, just broke out to the upside, so I think I should be buying the trade because it's bullish. Well, bro, that is manipulation. You just got manipulated. All right, so manipulation comes in a way of a fake out, right? And then after manipulation, after most of the traders stops have been getting rid of, that is when the distribution phase comes in. The distribution phase is when price now goes to the main direction that it was intending to go. That is the distribution phase. So that is exactly what happened over here. There was accumulation. Price opens up with the weekly gap, but it did break to the downside, right? Now, that is the manipulation, okay? But since you are a trader who has experience of this, you know exactly what happens whenever there is the first breakout and a weekly opening gap, something like that. You know for a fact that that is likely, price is likely going to be going back, like reversing back to the breaker, taking out the stops of the early traders who place their stop losses literally above here and are going for shorts. That is when the distribution phase later on comes. Okay, so that is the reason why I placed my limit orders at this breaker and liquidity that was lying at the top of the accumulation phase zone. All right, and this is exactly what happens. Some Sunday trades, Monday opens, Monday goes all the way above here. On Asian session, I think. Okay, let me open this. Okay, it's already on. So Asian session, we see price trade to the breaker block, take out the liquidity that was lying above this, buy side liquidity over here, and then that is when it triggered my positions, and then we dumped down with it. Okay, and whenever price came all the way down here, we had an order block over here. So okay, I'm not sure if I've explained this yet, but yeah, if you see back then, this was a majorly bullish trend. So we had put in an SMT over here, and then we saw price trading over to take out the previous high over here, becoming a change of character. So we had an order block and a demand zone literally overlapping at this point, and then there was this drawn liquidity that I drew over here. So price came down over here, tapped to the order block and at the demand zone, and that actually was my main trade. This buy over here was my main trade. This short position was just like a sell to buy because to be honest, when I was analyzing this pair, I was trying to take some buy positions. Like I was long in these positions, but that is when I realized that okay, we're just closing on the day, and we're gonna be I'm not gonna be waiting all the way for price to come all the way to the demand zone. Then that is when I'm maybe getting the buy trade. So I decided, you know what, let me just risk some couple of profits, dollars, and then that is when I'm gonna be shorting this position just in case it's the demand zone, and then that is where I'm going to be long in the position. And that is exactly what I did. So I placed my limit orders here, placed my stop loss just below the demand zone candle over there, and then yeah, price does that, pushes up, corrective move, blah blah blah, price takes out our TP. And that is exactly how I took this trade.